Good morning, good afternoon, good evening, wherever you may be. I hope you're having a lovely day, lovely morning, lovely evening, and lovely afternoon. Right, guys. Right, we're going to go through these questions in front of us together. Yeah? But before we do that, before we start, I need to remind us that in double entry bookkeeping, every transaction has at least one debit and one credit. Yeah? In double entry bookkeeping, every transaction has at least one debit and one credit. When you make a debit entry, there has to be a credit entry. And when you make a credit entry, there has to be a debit entry. Sometimes it's a multiple, but at least there has to be one debit and one credit for every transaction. Yeah? And then this will actually help ensure accounting equation. Assets equals liabilities plus equity remains balanced. Yeah? Right. And another note, another thing that may help to make correct double entry is when you sort of actually imagine that the entry that you're making, the accounting record that you're running is your business. Yeah? So we're going to imagine in this situation that this is our business. This is your business. Imagine this is your business. And your business is called ABC Limited. Alright. So your business is called ABC Limited. So we're going to start with question 1. Yeah? This question 1. And then we'll proceed downwards. Yeah? Right. So any questions or any answers you may not understand or you feel confused, please comment down below. I will ensure to respond back to you. Or any question, or you want me to go through anything with you, I will respond to you. Just comment down below. And if you like what you see and you understand what you've actually watched, please click the like button, subscribe, and put on the notification button, or click the notification button to ensure that you receive our videos when we post it in the near future. Yeah, we'll try as much as possible to post questions that are difficult to understand, and we break it down into simpler terms. Right, let's begin. Right, question number 1 is saying payment by check of £2,000 for the rent on business property. Payment by check of £2,000 for the rent on business property. This is telling us that we are making payments out of our bank account of £2,000. This £2,000 is going towards our rent. So basically we're paying our landlord. Yeah? So we have to think in this situation, which account, T account, do we have to open? Right? So payment by check, as soon as you see this check word, means bank and not cash. It is bank payment and not cash. Yeah? So we, in this case, we have to open a bank T account. This will help us to reference, to actually remind us where this money has gone to, what this money it was used for. Yeah? Hence we have to open a bank account, our bank T account. And then another T account we have to open up is rent. This will help us realize or remind us that this money has been used for rent, and we have actually paid our rent. It keeps record of all the rent paid and all the rent we owe, if we owe any rent in the future. Yeah? So we have to open a rent account, T account, to help us keep record of all the rents that we've paid. Yeah? Right, let's begin. So the first T account we have to open will probably be rent. Rent account. This is our debit side, and this is our credit side. Okay. Bearing in mind that this will be normally in details, it has to have a date, yeah, on both sides, but we're not going to include dates because the system will probably do it, but it is not actually necessary at this point. But this is going to be a simple T account. So payment of £2,000 for our rent. So debit side means expenses or income, whilst credit side is usually liability. This is money that we, the business, owe, or you owe, or something like that. The business owe to the bank, or loan, or the goods that you may buy on credit that we owe to our suppliers. We owe our suppliers. This is usually the credit entry for a liability. But debit entry side is usually income or expenses. Yeah? Right. So we're going to make a debit entry for this question first. So our debit entry is £2,000 has been paid. We have paid it. And how did we pay it? We paid by check. So we have to prove that this money came out of our bank. Alright, so this is our debit entry. Then our credit entry, remember every transaction has to have at least one debit entry and credit entry. Then our credit entry will be bank. And sometimes businesses like to call it cash as well. Yeah. But ideally, I would prefer every business has to open a bank T account, because most payments are being made by check, and then you can probably open a separate cash account to tell you that okay, it might be a petty cash, that sometimes we make payments using cash, yeah, to buy stuff, maybe buy dinner or buy stuff for staff members or something like that. Right. This is our debit side, and this is our credit side. Right. So what did we say? Do you remember that we're making this payment towards our rent, and it's a payment of £2,000? Yeah. It is £2,000. Yeah, payment of £2,000. So it is going out of our bank account. So see it as credit. The amount is leaving out of the account. Alright, it's leaving out of the account. Right. And then what is it leaving for? We're using it to pay rent. So we're gonna reference it as rent to help us remember that this cash, this money, has gone towards our rent. We're just keeping the record of what this money was used for. Yeah, and it's £2,000. Right. See, we've made our debit entry transaction, and we've made our credit entry. Right, let's start. Number 2 is telling us payment by check of £6,200 for goods for resale. Payment by check of £6,200 for goods for resale. Right. So payment by check means bank again. This money will be coming out of our bank account. Payments, we're making payment, we're paying to buy goods. Hold on. Sorry guys, we're paying to buy goods. Yeah, So this payment we're paying to buy goods. Right, payment by check of £6,200 for goods for resale. Right, so we've already opened our bank account. So the next one we need to open is purchase, because we're purchasing goods. Yeah, we could probably put every item, it'd be easier to categorize it purchase. Yeah, simply because you cannot open a T account for maybe you're buying stock, or you're buying, say we have what kind of business do we need to, we have a ABC Limited, sort of actually supplies, I don't know, it's a factory. So we cannot open a T account for a bakery. Say for example, it's a bakery business. We cannot open a bank account for a T account for our flour or our sugar or our machinery. Oh yeah, we can open a T account for machinery because that's an asset. All these little things like our sandwiches for canteen. What is it that needed for bakery? Oil. So basically we have to put it under one T account, and which is called the purchases account, T account. Right, let's begin. So this is our bank account, and then we're gonna open our purchases account. So debit, credit. Right, what is it saying again? Payment by check of £6,200 for goods for resale. Okay, so we're gonna name it bank, and this money is coming from our bank account. Remember, this is an expense now to the company because we're paying for the goods. It's an expense. So we're gonna put £6,200, and this money came out of our bank account, and we made this payments via the bank by check. Alright, okay, or you could probably detail the goods in bracket, but they're like I said, T accounts sometimes have a different columns in details, but in this occasion we might actually, this will come in a different video now. Right, bank £6,200, and then we go to our bank account to say that we've made purchase using £6,200 of the company funds, and this has been paid for. We're not owing, we didn't get it on credit, it has been paid for, so it's left our account. Is actually left our bank account, so we've kept record of it that this payment has gone towards purchases. Yeah, and then here this is our credit entry, and then here we made our debit entry, bank, to tell us that this money was paid by check. Okay, moving on. Right, number 3 is stating receipt of 20,000 capital into the bank account from the owner. Right, this is the 20,000 capital into the bank account from the owner. So you are the owner now, so you have decided to put in towards every bill payment, every expenses the business may make in the future, £20,000 towards it. And this is like something that the cash that the business will use for their day-to-day expenses. Yeah, Right. So receipt is always seen as income, receiving. Yeah, receipt is always seen as income. We're receiving. This is income coming in, receiving. Yeah, receipt of £20,000 capital into the bank account from the owner. So we're gonna put this into the bank account. Remember, it says into the bank account. So so what T account do we need to open? This is the question. Yeah, because it's going into a bank account, we have to open a bank account. And then because this is a capital, we have to have a separate T account to tell the business that this money is coming from you as the owner, because now we're seeing the business as a separate entity. You are a separate entity. Yeah, the business is a separate entity. You are not the business. The business is ABC Limited and you are a separate entity. Okay, so we have to open a different T account, which is the capital. This is telling the business that you have paid in £20,000. So the business owes you this money. Yeah, the business owes you £20,000 because you've literally lent the business £20,000 in as much as it is your business. All right. Okay. So we have to proceed to open a capital account. Debit side, credit side. So remember, I said capital, like credit side, is always a liability. So now the £20,000 is now a liability. Okay, liability to the business, because the business owes this £20,000 to the owners. Yeah. So the money came from you as the owner. So we're gonna have a credit entry for this one on our T account for capital. 20. Sorry. £20,000. Yeah. And where did we pay in this money? Into our bank account. It will literally help us know that this money has gone into our bank account for future reference. And then when we come to our bank account, and bearing in mind that this is our credit entry, so we have to make a debit entry. Every transaction has to have at least one debit entry and one credit entry. So now we're receiving our income. Yeah, it as much as is the money that the business owed to whatever, it also seen as income. So we're gonna use it to like pay for rents, purchases, like bills and everything. Yeah, so we're gonna help us to remember that this money, £20,000, was paid in by you as the owner. All right. So this is our income. Ooh, we've got £20,000 in the account. Whoop-oo. Right. Okay. I hope all these are making sense. So in any way that you're feeling confused and you don't understand it, please comment down below and I'll endeavor to get back to you. Right. Let's carry on. Number 4 is now telling us purchase of goods for resale on credit for £2,800. Okay. With this one, we are purchasing goods. We are buying goods now in order to sell it on credit. We buy goods on credit. We are buying goods on credit. We are not paying. Right. Number 2 is saying that we have made payment for these goods. But this time around, we're saying to our supplier, oh, can we borrow these goods on sale? We'll pay you later. Yeah, and then we borrowing these goods, we intend to sell it. So if we can be able to get the money to pay our supplier, yeah. So this money we're borrowing, see as borrowing, we're getting it on credit. We've not made any payments towards it, right? So, and it's a purchase of goods worth £2,800, right? So this time around, nothing to do with our bank, simply because we've not actually made any payment. So the payment has not gone out, nothing has gone out towards these goods. So we're gonna open a new tier account to help us record all the goods that we borrowed, we got on credit. Yeah, and that tier account is called Purchase Ledger Control Account. Purchase Ledger Control Account. Right, let's proceed to open it. Right, purchases ledger control. This account records all the money we owe to our suppliers, and it can be a liability as well. Right, okay. Hence, but in our purchases, we have to have, it is always a debit entry, because I see it as is an expense, our purchases. And then I don't want to confuse you, but this is how I remember purchases is like something coming in, so it's actually flowing into the business to help me remember. But I don't know how everybody else, it will help everybody else to remember to make the entry correctly. And as well as purchases is an expense is usually a debit entry. All right, so we're gonna record this as a debit entry for, how much was it again? For £2,800. Yeah, so we're gonna say on here, this is going to our purchases ledger control account. Purchases ledger control account. For £2,800. And this is our debit entry. For every transaction has to have a debit entry and a credit entry. And then remember I said that credit entry, debit entry. Remember I said that every money owed is seen as a liability and is usually a credit side entry. Yeah, so, and because we've made a debit entry on the purchases, this is a credit entry this time around. Yeah, so we now name it purchases, just to remind us that this is for goods, yeah, of £2,800. I hope I'm making sense. Yeah, okay, let's carry on. Right, sold goods on credit for £3,400. Sold goods on credit. We're saying to our customers, right, you take this amount of goods, pay us later. Yeah, take this amount of goods worth of £3,400 and then pay us later. Or the customer come to you and say, oh, can we borrow these goods and we pay you later? Yeah, then you said, all right, then take this amount worth of goods. Usually we do a credit check, but we'll come to that later in a different video. Right, you take these goods on credit for £3,000 and then pay us later. Yeah, so On this occasion, we need to open, because we are selling now. We're selling, not buying. We're selling. Yeah? So we need to open a sales account as we open a purchases account. We're selling now. And then we also need to open a sales ledger control account to help us record all the money our customers owe us. Yeah? I hope you follow. So in this occasion, we're going to open a sales account. Sales account, because we're selling now. We sold goods on credit. No money yet. So this customer is owing us £3,400. So we're going to open what we call sales account. Credit, debit. Of how much? I keep forgetting because it's different figures, like £3,400. Right, £3,400. So this time around, is selling, is actually leaving the company. That's how I try to remember it, but I don't know. I don't want to confuse you. But it's £3,400. So it goes towards our sales ledger control account. So this is our credit entry. We have to open a sales ledger control account to help us record all the money owed to us by our customers. Yeah, so this is a debit entry. This is £3,400 sales. Okay, right, so the next one is, don't forget to comment down below if you have any questions, or you're confused, or you want me to go through certain question again, or you have any different question. And don't forget to click on the like button and subscribe so that you may receive our video instantly when we upload it. Right, the final question is payment by check of $1,500 to credit supplier. Payment by check. We are now paying our suppliers the goods that we borrow. So the company ABC now is now paying suppliers for the goods that we bought on credit. So we're paying £1,500 towards it. Yeah. So on here, so the money is going out of the bank account. So we have to put purchases ledger control. So as £1,500. Right? Yes, yeah, sorry. We're paying towards ledger control. So we are paying by check to our suppliers towards the money that ABC borrowed, towards the goods that ABC borrowed. Yeah, so assume that we've sold the goods and we've recovered the money, so we're paying 1,000 towards it, £1,500 towards it. And then we have to come down to our purchases ledger control to tell us that we have actually made payment 1,500 towards these goods that we borrowed on credit. All right. Okay. I hope this makes sense. I hope I'm making sense. But we're gonna see if we can balance the accounts now and then close it. So with purchases account, so we need to close it So add it up. 8, 10, 6 plus 2, 8, 9, 9,000. So this goes towards, if we like profit and loss account, for 9,000. And then balance brought down, or I don't want to confuse you here, so we can probably see this as balance carried down, and then balance brought down. So this, in the future, I'm gonna do a T account. So this being a debit balance brought down, we have to, like, it will probably help us to know which T account that this entry goes into. So in this instance, on our T account trial balance, this goes on to the debit side entry, right? Because we've balanced it like this, it will probably easily help you. All you need to do is transfer it as you see it on the debit side onto the trial balance account, yeah, T account, right? We've balanced the purchases account, T account, and we have to balance our bank. So our bank is this. So 20. I usually go with the bigger figure first, 20,000, and then so 0072689. So we've got 9,700 minus 20,000 from 20,000. So 9,700. So this 3 9 1. So we have 10,300 pounds to carry over. Yeah. Guys, this is just to help us balance the book. Let's get rid of this. At least we know what this is for. Ledger, which was it 1,500 pounds. Right, to total it, 00538 10. Yeah, so 628 9 10 11. No, 0, sorry. Am I right? 1 6 2 9 10 0 1. Yeah, 20,000. So we've got 20,000 here. So balance brought down is this. Yeah, so we still have some cash. We're not on credit. We're not on negative minus sign. Our account is still have some cash to meet up with our expenses. Yeah, we still got 10,300 pounds in our account. Right, we've balanced this one, and we have to balance this capital, right? Balance carried down is £20,000. Balance brought down. So on our trial balance, the way you see this balance brought down is the way you carry it, transfer it onto the credit side of the trial balance, right? So this is why balancing a T account is very important for us to be able to work at our profit and loss account from trial balance and then into our profit and loss account. Yeah, or you do a profit and loss account, whichever way you want to do it, right? Purchases ledger control, so it's 2,800. So 2,800 minus 500, this 831. So we're remaining with 1,300. Yeah, so 1,300, which should be our balance carried down, 0082. There you go. And then balance brought down 1,300. All right, so this will go on the credit side as a liability onto our trial balance. Okay, sales account, carry it down 1,400. Right, this goes onto the credit side of our trial balance. Okay, right, sales ledger control. Debit side. Okay guys, I hope that you really do understand this, what we've done today. Please don't not hesitate, feel free to ask me any questions, and I'll be happy to go through it again on the comment section, please. I'm just checking to see if we've actually balanced all the account. Right guys, I'm gonna love you and leave you, and I'll see you next time. Right, have a lovely day. Don't forget to subscribe for new videos when we upload it, new videos, that you will be one of the first to receive it. Thank you for watching. Love you. Bye.